Good evening. Welcome along to our weekly video from SG Futures on the US markets. We're coming at you a day later than normal. This is because it's an Irish bank holiday on Monday the 26th. So we're going to have an extra day of trade for us to look at and give us an idea of how the week is going to progress from here. This is a really important week for the markets. Not only do we have month end coming up on Friday, we also have a slew of big names reporting all this week, from the likes of SAP this morning, who had a massive impact on a big sell-off in the DAX 30 market. That's the German equity market. We've also got the likes of AMD reporting tomorrow after the close. We have Boeing reporting on Wednesday, pre-open. We have on Thursday, we have Shopify before the open. Then after the close, we have Amazon, Facebook, Twitter, Google, Starbucks, a whole host of big names that make up a huge weighting around some of these indexes that we trade. So it's a really, really big week. We've also got options expiry coming up on Friday. And the big ticket item on the horizon is we're now about 10 days away from the 3rd of November, which is the US general election. And what we're seeing is over the last sort of week or so, and we called this at the beginning of October, that this month would likely be a bit of a down month. So we were of the feeling that you could comfortably short some equities and go long the volatility index, and we've definitely seen some returns on that today. And this is really just some hedging that's going on in the wider market to hedge against some uncertainty around the polls tightening between the two candidates in the US election and any potential fallout from maybe a very closely contested election on the 3rd of November. So what we have in front of us here is our E-Mini S&P 500 futures chart. This is a daily candlestick chart and it covers only the cash session. So this particular chart excludes everything within the Globex period. And what we've seen over the last 10 days is we've seen this channel down and a little bit of a curve or an uptick on Thursday and Friday last week, and then coming in this morning. We've had a real risk-off sentiment across the markets, but as I go through in this video, this is not as bad as we think. This coming into the pre-market this morning, we haven't traded today, but we came into the pre-market this morning thinking this could be a really big sell-off today, and I'm going to show you a couple of reasons as to why this wasn't as bad as we potentially feared. So as we've seen, we've been in a downtrend for about 10 days, and we've had an uptick on Thursday and Friday last week. So contained within this box, we've literally just seen balance over the last 10 days. We've seen a couple of up days, we've seen some selling, and we've got a couple of candles in the middle here which are a little bit ugly in that they are that we've explored higher and then closed down or near the lows. That was Tuesday and Wednesday last week, and then Thursday we came in and we were very, very bullish. The same on Friday, but we printed some highs early on and we just dripped down over the course of the day, and that can be typical for a Friday where there's potentially some risk events that are going to occur potentially over the weekend. Who knows what sort of mud is going to be slung between the two presidential candidates, what's going to come out, and there's a little bit of de-risking that's going on Friday. Maybe people who had gotten long, taken some profits, maybe people who are short. Maybe that was the reason why there was a rally on the Thursday and Friday. But coming in today, we've got a real risk-off sentiment coming into the market, and we've printed a low so far today of 33.56, I believe, and it's around the neckline of our previous head and shoulders pattern in this particular period of about 15-20 days, and we've already done a video on the head and shoulders pattern, but we've printed a low in and around the neckline, and it also corresponds with, over here we have a volume bar. It also corresponds to some pretty low volume nodes within the volume bar over this entire period, so it's not a major coincidence that we're printing lows in and around here. When we jump into the weekly profile, we're going to see a little bit more nuance of what's going on. So looking at this from a weekly profile point of view, We have our areas marked off from last week that we discussed. This big profile in here, which was the last week in August, and there was a massive distribution, and there were some certain areas within this profile that we thought if we broke to the upside that we would see maybe some continuation filling in of this box in here. But really what was most important coming into this week, and we spoke about it last week, and we didn't get all the way there last week. This is last week's profile in here. Let me just mark it off for you. So that's that marked off. That's last week's profile, and it's a little bit of a B shape, but we're quite wide from a volume perspective. So we spent a lot of time, and we've printed a lot of volume in this particular area between 34.20 and 34.60. And you've seen that we've talked about on Twitter that, you know, this was just pure chop in this area last week, and it was really difficult to trade anything between those two prices. But then when we got down to the lows, the areas that interested us were not the prior week, but the week previous to that. And these are marked off in this particular box in here. That this is just a really ugly looking profile, and that we expected it to be filled out a little bit more, and some of the structure to be repaired. And as annoying as the E-Mini S&P can be, we came down like 60% into it and printed a low around 34.05. Even more annoyingly is that we actually repaired this during the Globex session, which doesn't count. We want all the stocks to be moving at the same time, so it really only we register the cash market hours. And coming in this week, we've really felt that we were going to spend some time in this particular area here. And what was interesting is we opened up here around the 34.15, which is around a low volume node down here, and we sold off hard, and we've printed a low in around the 33.55 sort of level, 33.56. And there's an area up here that we're really interested in, that this sell-off within a period has printed a load of singles, which we'll get into in a little bit more detail in a minute, a load of single prints, and that now becomes some reference points for us as the week progresses. So again, coming into this week, given that we're pretty much 20 minutes away from this profile here, Monday the 26th being closed, we expect to close in and around sort of 33.85 to 33.75 sort of price. But we expect over the course of the week that if we can get the right level of momentum, that this particular box in here is what's relevant, and that we're going to try and fill that out. And that what will be important is how the market reacts when it gets back to the singles within a period printed today. How the market reacts. Does it reject them immediately and go lower, or do we get acceptance, or do we get rejection, a little bit of consolidation, and then we get acceptance? So they'll be the two things that we're definitely going to look out for this week. Jumping across into our daily profile. Now this is the daily profile on the E-Mini S&P. The one we were looking at previously were weekly profiles. So this in here just shows us that we had over the course of the last week, we had 4 days of balance. And this is where we had, we had value in here in the gray area, we had value in here, and the value is what we call overlapping. So the value in the next day overlaps the value in the previous day, and that's the same thing over the course of the week. And what we'd actually expected coming in on Sunday night was that we would actually break above this, and we would have a value gap. So the value would start printing above the 34.57 level. Now, given that we had some sort of a bearish tone with the gap down in the Globex futures on Sunday evening, that's just been continuation, and we've sold off relatively hard. But when I get into looking at some of the nuances of not only the market profile, but also some of our internals, it's shown us that it's not as bearish as it might have first seemed when the market opened this morning. So again, looking at these 4 profiles in here, they represent balance, and that represents that there is value in and around these particular prices, and the market has acceptance between buyers and sellers, and we're seeing relatively good profile shapes. Granted, Monday and Tuesday of last week, they weren't fantastic, and that Monday is a bit of a really ugly profile, and that there were some single prints in here, but we got acceptance in the following days. We had a poor low Wednesday, poor low Tuesday, but then Wednesday really flushed all of that out and cleaned and repaired that part of the profile. What was kind of annoying as well is that we printed a low in around the 34.04 and we wanted to see a low of around 33.95-ish, which is what we've gotten today, absolutely. And we've had a real value gap. So we talked about, the value being overlapping up here, but instead of it going up higher, we've had value to the downside instead. So value is now being established down here, albeit we've got some single prints and we've got a little bit of ugly structure, which we'll see as the week progresses how that's going to fill out. So looking into the sort of daily profile, this is what we trade off every day. This is today's profile, which is Monday the 26th. We have at the lows, we have really good excess on G period, and what tells us that there was 74 contracts traded down here, which tells us that this particular auction is finished. And 33.56 is a good low, and that's a low that we can carry forward, that if the market gets back down there again, that could be something we could then perhaps pivot off. As we move higher into the profile, we can see that the volume point of control is at the upper end of the value area. So value, granted that we've gapped down from a value perspective, so value is lower, and the volume point of control is at the upper end of value, which is, if you're clinging to things from a bullish point of view, this tells us that the bulls aren't completely dead and buried just yet. What we will look for over the coming days is the single prints in B period, and I will just mark them out in here. We've got singles here, and we also have singles in A period in here. And so this is a double distribution. So we have, this is very emotional. This A period, there's a lot of selling. It's not a full proper auction for us to work off. So this will be relevant if we come back and trade back to these prices again. What I think is really interesting is that on B period, the high of B period is 33.9650, which is in and around the low volume node on the weekly profile that we talked about from 2 weeks ago. And these are the sort of subtle nuances of market profile that you just would not get on a candlestick chart. And so again, we will take that to be a really important and really key level. We'll carry that forward into the trading sessions across the next 4 days. So how do we carry that forward and how do we act on this? Well, if we trade back up here again, we look at how price reacts when it gets above 33.9675. Does it reject immediately? Does it reject a tick in front of it, as often we would see in a market like this, so people front running that particular price, or do we get acceptance? What we would probably see is an immediate rejection here, and we would probably print a high of 33.9650, and we would reject, and we may consolidate down below here. But any sort of a second return to this particular part of today's profile, we would deem that to be bullish. What we would look to see first target would be the C period from Wednesday the 21st, and that brings us into last week's range. So that would be something we would look for. We would also look for the single prints in C period down here. Again, this is whilst this was excess last week, this is an auction that, albeit it was completed last week, we haven't spent a lot of time down in this area here, so we would expect to maybe see 34.06 as a potential pit stop midway through A period from today. So that'd be our first target to the upside, and then a full filling of A period up to 34.16. Up to 34.1625 would be our next target. That also coincides with the initial balance low of Wednesday of last week. So this is how we're starting to piece together any sort of trades we might take with our entries and exits based on what we're seeing in the profile. If you looked at this on a candlestick chart, you would never see this. You'd never know that these are key levels to pivot off. And the reason why we focus so hard on the E-Mini S&P is because it's such a beautifully technical market, and you can see when we pivot off these levels, it tells us who's in the room. It tells us that there's very technical traders probably trading from a day trading point of view, and we can immediately start to ascertain what their risk profile might look like. So if they go maybe 4 or 5 handles offside, there's a good chance that they're going to puke out. So who is in the market, what's their agenda, and how much pain are they in? And we're already starting to build that picture already. So when we get back up here, and if we can see the market tipping off these sort of levels, we will know who is in the room. These are the things that are worth knowing and worth carrying forward when we're taking our trades. So that's things from a daily profile point of view, and that's what we're going to be working on this week. So I did mention that when we came in today that we had some pretty heavy selling during a period, and there were some subtle clues contained within the internals that we use that told us that maybe this wasn't going to be as bearish a day as we really thought. So the two internals that we pay a lot of attention to are the Nasdaq Tick and the NYSE Tick. If we were to look at the Nasdaq Tick, we've boxed out today's tick chart, and these are all 30-minute candles, and anything below 1000 tick we would deem that to be pretty bearish. And the point is, we never really got down below 1000. Granted, we opened down around minus 500, and the tick got just a shade above minus 1000, but we never really got heavier than that. And if you look at a really bearish day in comparison, you could have a print of minus 2000 and it never really gets above minus 1000. And that would be a day where we're selling very hard. And these are the days where you don't even think about fading the move. You don't even think about trying to buy a dip. Really what you want to be doing then is you can be confident that if you sell any sort of relief rally, that you're going to get good continuation on your short. But today, this told us that there wasn't likely to be a huge amount of value in getting short. If you'd gotten a short early, I think you probably would have done all right. But it told us that as the day was progressing, it's not really as bearish as it might be. And this is the tick on all of the Nasdaq stocks. What we use in parallel to that is the NYSE tick, and the NYSE tick had a little bit of a different profile to it, and this is everything across the New York Stock Exchange. And you'll see here that we've opened here at 230. We've opened here minus 2000. We've traded down to below minus 3000, and initially we thought this could be a really bearish day, but the second half of the initial balance, we kind of got up above zero. And this tells us that there probably isn't going to be much value in trying to get short. That if we do try and get short, there's a good chance we're going to get absolutely clobbered. So we need to be maybe a little bit more thoughtful about where we're getting short or what our trades are going to look like. And as the day wore on, we kind of thought over the course of today, now granted we didn't take any trades today, but as the day has progressed, 2 or 3 hours into the session, we're not really holding above minus 1000, and we could be thinking that this could really sell off. But then we've got this really big strong green candle that trades positive 1000, and then the next one which trades nearly positive 3000, which is a sign that there are buyers in the market. And it's not a day for us to be shorting everything that moves, that actually there could be some value in maybe buying some dips. So these are the things that we look at, and if you need some assistance in getting the tick chart, we can show you how to get that on Sierra chart. Just drop us a DM or leave a note in the comments here. We can point you in the right direction to get that. But these are our sort of gauges that we would look at when taking all of our trades. So anything that's overtly bearish or overtly bullish, and we're trying to get on the other side of that, these are our eyes and our ears in terms of how we go about structuring the trade and structuring the risk associated with it. So if we look at some of the stocks that are reporting this week, we're going to start with Apple. So when we look at the Apple stock, we've seen really over the last sort of 10, 11 days, we're in a little bit of a downtrend. We've had this morning, we've had some investment banks coming out with a little bit of a bearish outlook on Apple. We're not so sure, although we've always been of the opinion that you own Apple, and we don't really trade it too often. But looking at the profile in here, we had a really sort of strange day on the 19th of October where we got single prints all over the place. Then we built out value the following day. Again, we built out value the day after. And then we had a value gap on Thursday the 22nd. The same happening on last Friday, and today we've been dragged a little bit lower again. We're of the opinion that anything below $112 could signal some short-term bearishness, and this corresponds to this period of balance in here. So I'll just mark off the balance period for you. This is a strong period of balance that dates back quite a while to sort of the tail end of September, and we look at the highs and the lows in here as being pretty relevant. If we break below the 112, we would be targeting some downside areas in here, probably 106, maybe 104, and then God forbid, below 103. We don't really think that's going to happen. But given how some of the earnings, I think they're going to be a bit of a mixed bag this week. I don't think it's going to be as bullish as we might have thought coming into this particular earnings period. I think there's going to be a little bit of a wake-up call for people who are long these stocks. But overall, as a value stock, Apple is definitely one of the best to own, and it would be in probably our 20 or 30 year bucket for stocks that we'd like to own. Then if we look at Facebook, they report on Thursday evening. This is a stock that we think is probably has the potential to be more bullish than potentially Apple. You'll notice we've been in a period of balance over the last 4 days. We've had a look at the lows down here at around the 274 mark, and we've come back up and we're trading back inside Thursday's range in here. We've got a lot of single prints up here, but I think as the sort of risk-off tone continues, if that continues into the latter half of this week, then I expect that we may see further downside, and the targets would be these particular single prints in here from Monday the 19th, and sort of 270 to the downside. But overall, we'll be relatively bullish this particular stock. And we think that there'd be some value in potentially buying the stock in around the sort of 270 mark if it got down there. Then we look at Amazon, who also report on Thursday night. We'll notice that we had this big day of selling in here, which was Friday the 16th. That was a day where things were pretty bearish for Amazon, but since then we've had people buying the dip, and value has been relatively the same over the last sort of 10 days, albeit slightly lower, and today we're closing in the upper half of value. We just think this stock is going to be absolutely COVID proof, and they're really going to benefit from any sort of lockdown measures as we approach Prime Day and as we have the run into Christmas. We think that this is going to be relatively bulletproof, and we actually expect this to be one of the more positive earnings reports in this particular earnings period. Then if you look at Microsoft, they report tomorrow evening after the close along with AMD. We've noticed today that there's been quite a bit of selling down here. We've broken balance, so we had 4 days of balance last week marked off in here. And we had the value break, so we've had the break in value. So we had value overlapping from Tuesday, Wednesday, Thursday, Friday last week. Value was all overlapping, and when value closed up here, when the stock closed up here above in the upper half of value for Friday, we really thought this was going to break higher on any sort of bullish news. And then today, this was just being dragged lower by the market. And we've had a value break. So we have the value area high of 210, and we have a clean break in value between that period of balance down here. So we would probably take the high and the low in here at that distance, and we would measure that down here. So I think this probably has further to go, maybe around the 205, 206 sort of level, if we get any kind of bearish news around this particular stock. that really depends on how their reports go tomorrow. Anything from a bearish perspective, I think, sends the stock down to the sort of 205, 206 level. But ultimately, this is a really, really key stock, which many people would be looking to have in their 10 or 15 year bucket. And again, that would be our perspective on it. And any sort of weakness in this, we would definitely think would be bought. So that's one to think about as we move into earnings tomorrow. Then finally, just have a quick check-in on Netflix. Netflix, who reported last week. You'll notice this particular profile in here from Tuesday, and the big tail down here, which was the selling tail, printed a low after hours of 486. The reports weren't great, and I think that's a good indicator of how the other tech firms are going to report during this earnings period. And we saw the following day we had some consolidation here. It tends to break higher but failed. Again on Thursday we had further consolidation lower. We had a value gap, and then over the course of Friday and today we have overlapping value, which could be an indication that the bottom may be in on this particular stock for the sort of medium term, and we may start to see on any sort of bullish news this may go higher. So again, that's one that's already reported, and I think all of these stocks are going to be dependent on if the stimulus bill gets passed, if it gets passed pre-election, which I think a lot of people wanted to get passed. I think that's what all of these markets and all these stocks are really waiting for. It is for the stimulus bill, and then also any sort of uncertainty around the election. I think that's driving the other side of the trade on these particular stocks. People kind of hedging their risk, de-risking out of some of these stocks, maybe moving into some commodities, some bonds, anything that has maybe a lower risk profile to these particular stocks, if there were to be any levels of uncertainty around the outcome of the election. So there's an awful lot to go on here over the course of this week. Any sort of definitive victory for either candidate in the presidential election, I think, sends all of these stocks much higher. I think if there is if it requires a trip to the Supreme Court and it's dragged out by a number of weeks or months, then I think we potentially enter a fairly bearish period on some of these stocks. So that's just our wrap up on our E-Mini S&P and all of our stocks on our plan for this week. If you've got any questions or any comments, leave a note below. As always, you can drop us a DM on Twitter. We get tons of DMs and we respond to them really quickly. And as always, check out our website, SG Futures. If you want to learn about market profile, we've got some really good course material on there. Drop us a note if you want to know a little bit more about it. But otherwise, have a really good week trading and stay safe out there.